Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Oh boy, what a crazy market, eh? Up and down like you know what. And if you don't know, RationalInvestor.com's Daily Brief Recap. That's good to hear. Anyway, today. So here come the hiccups. It almost seems like they kick in almost the moment I hit the record button. Anytime if I'm doing the daily brief or if I'm doing these, it must be that big. And here's Brian kind of intro that sets my tummy off. But I don't know. Anyway, here we are. So it is Friday, 19th of June. This is a quadruple witching day event. So we're seeing some absolutely insane volatility in some, especially the commodity type assets in the market. So my basic message to the site is just be damn careful. Go slowly. Don't take any big bets. This has got trouble written all over it today. Having said that, I was actually quite fortunate. I got off a really nice win here today, so I'm feeling pretty good. And interestingly enough, I did take a very small short bet, and I do have, of course, short hedges on and stuff, insurance policies and crypto. So it was interesting to see the price action right out of the gate first thing this morning, and then actually to see how risk on is starting to melt back down here. So interesting action. We always start off the conversation with good old U.S. dollar index, world hegemony. We basically confirmed bullish AB equals CDs. And, we were joking through the daily brief that probably we should be using Mr. Gann's analysis and his levels, considering he's so astrologically attuned. So 98.14 seems like a completely logical target as well. We also have nice little gaps to be filled in, so you can see the market's going through the process of doing that right now. And if we look at things like Euro, they're looking extremely heavy in here. And also, too, we talked a little bit about my crazy billiard ball, fractal kind of thinking. And as you can see, we have this little M. I actually had placed it kind of thinking that, this probably is going to look something exactly like that. But we'll see how it goes. Only time will tell. This June 30th, July 1st, we also talked about this in the daily brief. There's a whole bunch of, obviously, position, what they call window dressing going on into the end of the quarter, where the fund managers want to show their fund holders that they were long the sexy stocks and short the crappy stocks. So we'll see a bunch of that happen. As I said as well today too, we happen to have this quadruple witching, so huge volatility in the derivatives markets. And then, add insult to injury, of course, we have this celestial event. Massive social unrest that seems to be playing itself out in a weird sort of way. I get the feeling like this was all COVID, right? And COVID crisis. This is all about social unrest. And then unfortunately, what I'm really worried about is this is all about war. But anyway, we'll see how it goes. Only time will tell. But I would be sort of thinking something along these lines with this risk off proxy. Numbers are ramping up. We're hearing, stress, across the southern U.S. Of course, China, they're got a little bit of a resurgence going there. So, next week or two could be a pretty tough slog here. And then, interestingly enough, once we get on the also too, to add insult to injury, there's also a tax loss selling window here for a good portion of the world. And keep in mind, too, this is exactly sort of 50% of the year. So Mr. Gann, of course, 50% rules in price. He's often very interested in sort of quarter points, 50%, three-quarters points, pivots. Just a world of crap going on here over the next couple weeks in the market. It's going to be choppy and ugly and messy. Wow, that sure was a rant, eh? So with that kind of backdrop, oh man, risk on, risk off. I get the impression that probably, maybe a little bit ahead of that July 1st window event, maybe heading into the weekend. I don't know. I'm feeling like, people are kind of like, I want to take maybe some risk off the table. We talked about the Russell 2000 versus the Dow actually pointing down now. And you can see we had actually what I hate to say it, but it's actually a pretty cliche setup here on the stock market. Probably the best way to show you this is over here. I think it was one of these that I did up. Sent this out publicly. Week or so ago, we were kind of like, okay, well, we got location. Now we have to see some signs of divergence. Got that. And then we got a nice little inside bar painted yesterday. Great analogy of a trader's life here, eh? Look at this. This market opened up here and at one point was screaming up. And, if you were chicken shit and didn't really know what you were doing, if you're going to trade an inside bar, you got to risk against that high over there. So what a great analogy, eh? All they did was take it right back up to the top end of the range and then puked out. So, ironically enough, now if we go through this low from yesterday, that actually becomes a nice intrabar M top. We'll see how it goes. My hunch is because it is quad witching, there's probably a lot of funny business going on through this. And, wicks and tails like to be eaten. There's going to be a bunch of people that are going to want to try and get out if we get any kind of rally back up top there. And also, too, it's a Friday, right? Options expiry around stock and stock indexes. Like I said, quadruple witching, big ugly event here. Are they really likely to dump the market today? I doubt it. But, could this set up for the next week or two of some downside pressure? I mean, you tell me. I mean, the writing's on the wall there. Of course, as I've said before, if the pattern is negated, well, you have a pretty small risk window there. And you just walk away. Don't take any personal net worth of a failed trade setup. I mean, shit happens. It's trader's life. You're never going to be right 100% of the time. Just get used to that now. And really, the question is, can you identify these relatively small risk windows that if you do take your shot and the market dumps into reload zones, 50% rolls, you can see how far away that is. You're going to get paid substantially more than if the trade fails and you have to walk away. I mean, that's the secret to trading. Keep telling you guys day in, day out. I sure hope somebody's listening. Anyway, that's sort of the stock market, what's happening now. Interesting enough, we watched some absolutely insane volatility in the crude oil market here earlier this morning. Just want to make sure I have the right screen on here. And we had kind of I had talked to you guys about this recently too, in that, this is a perfectly valid trader setup, shorting reload zones. And in this particular case, look at the high there. So that's 40.69. Today's high here now 40.60. Yeah, are you a trader? Do you have balls of steel? Can you hang in there? Frankly speaking, I don't know how this is going to end. Nobody does. And really, it's just a trader's life. And, they came within 9 ticks of busting that top. Could they bust this top before the end of the day? Sure. They can do any old damn thing they want. What I did notice, and what worries me about today's kind of price action and people going, hey, this is a new bull market, rah, 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 rah. What worried me is, we got these big wild swings that just destroy the smaller time frame players. So while we were doing the daily brief, people were like, holy crap, what the hell's going on in crude oil? But this is exactly quadruple witching business, and it can be absolutely brutal to the small speculative trader. This kind of action can destroy you. So, do you understand why? Around quadruple witching, it's probably best just to cool your jets and let these big guys all mess around with each other. And when we get on the other side of these events, we can start getting back to hunting setups and all that kind of fun talk. I'm not quite sure who's won this battle here just yet. And I wouldn't fault anybody if they were like, you know what, I'm going to take a short shot against that and risk against these highs. I wouldn't fault you, but it's a trader's life. You might get stopped. Next buzz in 10 minutes kind of thing. So it is interesting to see the disconnect between the stock market and the crude oil market right now. I'm not quite sure who's right here. On the flip side, if we sort of think risk off, we can actually see that bonds, we talked about that, I guess, 2 days ago, inside bar fired, and the bonds were actually down a big chunk here today, but you can see they're rallying back smartly with the weakness in the stock market. And lo and behold, here comes the gold. Hey, that rhymed. I don't know whether I can believe that this is the breakout. It's never really a good idea to take huge bets on a Friday afternoon. Also, too, with all the quad witching and all that kind of fun talk, you know, I could very easily see come like Sunday night, first thing Monday morning, that this market actually gaps higher. That wouldn't surprise me here. And then, maybe what I would think of is if you did want to participate in this massive formation, take a look at your individual stocks. And on any kind of sort of Wyckoff check of the original bought level, maybe a check of these tails in here through sort of Monday, Tuesday, if you're super jazzed about, participating in the gold market, go for it. So, I mean, hey, this is encouraging for the gold bugs. We're right back up at the top end of the range. But understand fully, everybody, we talked about this lots recently. There's going to be trap bears that are up in this wick up here. They're trap bulls. There's going to be trap bulls trapped up in this wick up here. And then also, too, what I'm worried about, of course, is if they do gap the market higher, like Sunday evening, outside of retail hours, that's probably a trap, and they're probably going to bring it back down. So just be prepared for that kind of price action. But I got to say, for you gold bugs, and of course, if risk off is really off, if risk on is really off, and this is topping out, and people are shitting their pants about coronavirus and ramping up hospital admittance and all that kind of stuff, because the numbers are starting to ramp up again. And the bond market's taken off here. Well, maybe the gold finally catches a bid and has its day in the sun. I've talked at length about the gold market. I'm not overly impressed. I would rather have my money working elsewhere, but that's just me. So what? So what? You do with your money as you please. Heading to the stock market in particular, as we had sort of talked about, now with this actually painting a red candle here, this reinforces my sort of belief that the small cap market is looking a bit exhausted right now. And I have to, be very, very, very cautious here about spending any new money in the stock market. That's basics message. And then just like we had here, if we can break out through the top of this downtrend line, then maybe the bulls are back. And, I would hope and expect that on that kind of event, things like S&Ps, the SOX, which is one of my short proxies, they've all broken out and they're rocking and rolling. And we see, breadth is breaking out on the dashboard and stuff like that. But for the time being, this is like I'm from Missouri. So if you understand that line, then you'll understand exactly what I'm thinking. Now, I keep telling you guys this day in, day out. I don't get into the business of either predicting what is going to happen or what isn't going to happen, because that's a mug's game. You're going to get proven wrong eventually, and it's really embarrassing. So trade your setups, trade your plan, and just follow your plan. And remember, Brian doesn't like to think. The more I think, the more it hurts. So again, today is another good example of don't think, just trade your plan. In that, and I think I actually even tweeted it out because I love tweeting out these banging out doubles tweets. And the question is, where the hell's the damn page? This is a very good example of a stock that meets my fundamental investment criteria, as taught to me by an old floor broker. I step in at like 15 cents a share. Not much. And that, if anything, is absolutely perfect for this kind of arena. You might even argue that there had to be one more fuck you back in the fall of last year. But because you buy these things based on the criteria of the stock, you're not really too concerned because, all of these shareholders, they've already been destroyed. That's the roll stock back, shares for dead, options to directors, yada, yada, yada. And really, the irony of it all is all you got to do is just sit back and be patient and let your money work. And, if this thing goes off the board, so be it. But, considering that the directors are incentivized at these levels, they've paid down debt, so it's not like some debt holder can force them into bankruptcy. There is no overhanging debt to worry about. So really, it's just a question of, okay, well, what the hell are you guys going to do? And sometimes these companies take a little while to get their act together. In fact, when I bought this thing originally, it was called Voltec Energy. I think it was Voltaic Minerals. And they actually reorganized the company. They renamed it Alpha Lithium. And away she goes. And again, remember, don't think, right? Why put yourself in a position where, the irony of it all is I'm sure through all this kind of volatility, I'm sure a lot of weekends got shooken out of this stock. But I bought the stock based on fundamentals. As soon as it doubles, well then awesome, sell half on a double, away you go. You're sitting pretty. It's free stock. And then just make damn sure that if it doubles again, sell another half. And I don't know where the hell this damn thing's going to top out, but I just keep paying myself every time the damn stock doubles. So, here's a great example of, gee whiz, I got handed a really nice treat today. And it's all I do is I just run my small business of trading. I have a very simple plan, rinse and repeat, day in, day out. Just come back and keep doing the same thing over and over and over. So, there you go. Brian got paid today. Woohoo! Now, heading over to the corn and crypto. On Fridays, of late, we've been actually extremely fortunate. One of our crypto OGers has taken advantage of our open sort of mic on Fridays to come in and talk with the community about what he's seeing in the market. So Fridays, we have Colin on. Of course, he's gotten so good at his presentations, and this often happens to a lot of our site people, is that they just get to a point where they are mature enough. And this gentleman, he has companies chasing after him, and he's been hired by the crypto world to be a crypto analyst. And then they were like, we want more of you, more. So sadly, that might mean that Colin, unfortunately, does less presentations at TRI, but I think it was a win-win all around. He took the opportunity while doing the shows to cut his teeth and work on his public presentation skills, public speaking, all that kind of stuff. And, of course, the community greatly benefited from his wisdom. So I think it was a win-win all around. And actually, I even put the invitation out to current OGers and site participants. Colin, I think, is going to reduce his participation on these shows. So, I basically said to the community, if somebody would like to step up and fill his shoes and work on your presentation skills and let us know what kind of setups you're hunting in the crypto space, we're all ears. So anyway, point being, we had a great presentation with Colin. I think the general message, basically risk on, right? I still think crypto to a great degree is basically a risk asset here. If risk on in general is looking a bit heavy and cautious, it shouldn't surprise us that crypto looks a little heavy and a little cautious here. I actually believe with this M-top and, the quick confirmation here, then another quick confirmation here, I do feel as though we have smiled and M'd out. And also, too, what I noticed, and it was actually, I think, serendipitous that somebody had reminded me from a tweet that I put out back in 2015, and then I looked at that analysis and compared it to my US dollar billiard ball theory. But interestingly enough, I actually looked at this price chart and I went, gee whiz, this looks awfully familiar. Oh yeah, it turns out Bitcoin chart actually looks very similar to this, just in a very short term. And I think the big thing that jumps out at you is, you see these M's come in and you see the market flirting at it. And at these levels, you're kind of like, I don't know, maybe it's not going to break down. Maybe the M's aren't going to do their thing. But look what happened afterward, right? This is actually the moment where I put the tweet out and the market just collapsed here. So this is really what I'm worried about right now, is that it feels as though the market just believes that Bitcoin's $9,000-$10,000 here. We've already M'd out, and it just sort of feels like we're kind of just waiting for the shoe to drop. Remember, there is no fundamentals driving this right now. And if anything, when I do these crazy chaos theory kind of thinking, gee whiz, what a coincidence. There's our reload zone. What is that? 5,200 up to 6,300. Gee whiz, now a chaos level is painting 5,600. Oh boy. Now, keep in mind, I'm not in the business of predicting. Don't think I'm calling anything here. I'm just drawing levels and postulating about what may happen in the future. I'm not making any predictions here. So what I will simply say is she's back to looking heavy. I'd really like to see her back above this 95, 9600 area and break this downtrend line for me to take away that sort of bearish leanings. And then only on that event do I get a W on the other side of the trend line. Do I actually get a buy signal? So there's a lot of technical repair that needs to be done here for the bull to actually step back up and take control of this market. It's looking a little tough here, folks. So, with that said, with what I just said about risk on in the stock market, with what I said about the U.S. dollar index, with what I said about the, the temperament to buy junior stocks right now, really, this is basically the same message. Hopefully, I'm wrong. Prove me wrong, please. Go and bust my shorts. Go and bust the top. Bust the top. It's a big bull market. Please prove me wrong. But I don't know, folks. And then yesterday we talked a little bit about the perp poop index. I thought it was interesting, and just out of curiosity, I looked at it, and gee whiz, off of this fractal bottom, 877 chaos level, off of this fractal bottom, 4669 chaos level, off of this fractal bottom, 4669 level. Oh boy, that's a hell of a lot of chaos resistance. So it really doesn't actually surprise me that this thing's run into a world of brick wall resistance up here. But again, the cool part about this is it's actually really simple for the market to prove Brian wrong. Just simply, you see where we are here. It's not that much. Just go and take this out. Just all of you watching on the YouTube channel, just go and buy this and break us out of here. And if that's the case, we're probably heading up top here. But right now, this is a very, very tough brick wall of resistance. And I am seeing that right across the board. So just understand that is sort of my message of the market right now. Okay, everybody, I think I'm going to leave the offering at that. I hope to see you all on Broiler Chickens on Sunday, and let's see what they did to crypto over the weekend here. All right, everybody, all the best, and bye for now.